Asset class returns in January 2020. So in this video I'm going to take you through some of the highlights of January in markets across all the major global asset classes. So at the highest possible level, it was basically defensive assets did well, growth risk assets did not do well. I'm going to go into a bit about the why and so a little bit about what happened in a minute, but we'll just quickly run through there. So at the top of the table was US Treasuries, followed by investment grade credit, US aggregate, international aggregate, global listed infrastructure, REITs, global sovereign, EM sovereign and hard dollar, global REITs, global ag, cash. I mean, pretty much anything with a bit of duration or yield sensitivity to it. I mean, you've got the bond proxies featuring high there, global listed infrastructure and REITs did well. That just speaks to the whole sort of risk-off kind of dynamic that took hold during January. Middle of the table is something that I just wanted to highlight in passing too, is frontier markets. I've noticed it a couple of times where you get this kind of sell-off and frontier markets kind of just do their own thing, and it's quite an interesting dynamic. It's quite a different beast to emerging markets actually, and probably a good prompt for me to have a look at that one perhaps for the weekly this week. But anyway, the rest of the table there, I mean, basically everything in the bottom half is equities, so and also high yield credit, and EM sovereign bonds in local currencies. So that's the EM currencies aspect taking a hit there, which you'd expect when commodities are also taking a hit. Emerging markets, obviously China's tied up in that, which we'll get to in a second. And yeah, I mean commodities, well, there's a few very big moves there actually. Industrial metals taking quite a significant hit there, copper, and also crude oil. Crude oil is actually down about 20% since that Iran panic. And speaking of that, I guess we can kind of move into what was driving this, quite extreme shift in performance, because December was almost the opposite of that. So of course we had a whole bunch of event risks kind of hitting at the same time. Earlier in the month there was that Iran issue that seemed to just come and go with the blink of an eye. If I told you in advance, if I went to the future and came back and told you about that, I think you probably would have expected the markets to play out a little bit differently than what they ultimately ended up doing. And of course the impeachment, and the big one really is the virus outbreak. But events definitely matter, but then something I was actually noticing around the middle of the month, and I wrote a report about this a couple of weeks ago, I noticed that stocks, especially S&P 500, but equities in general, they were starting to look a little bit overbought. Sentiment was getting a little bit frothy. Certainly US equities were starting to get a bit more expensive on absolute sense. So, there was a few, specific tactical signals that were saying, the odds of a correction or sell-off at this point were pretty high. And the same thing on the bond front actually. I was looking at bonds, golds and REITs, and I'm seeing some pretty bullish sentiment and technical signals there a couple of weeks ago, actually before the whole panic set in about the coronavirus outbreak. And just on that, I mean, in terms of what to watch for next, because it's always good to get a little bit of context of what's happened in the past, but we've got to be constantly looking forward. What to watch for next? In my mind, the biggest thing, or the biggest issue that I'm kind of thinking about is when to start looking for opportunities. Whenever you get something like this coronavirus outbreak, I mean, yeah, definitely it's serious, and there is some probability, I don't know what their number is, but there's some probability that it turns into something that is, materially bad, and something that could, impair asset markets for a to a greater degree and for a longer time. But my, instinct is when you get things like that is to basically fade them. I mean, that's not to say that markets won't take a few more weeks. They probably will take a couple more weeks to settle down. One thing to note is that there's quite a few things down the bottom end of that table that tend to get a positive seasonal kick from late Feb onwards. And just in general too, the it's kind of a mismatch against my core thesis for 2020, or some of my core views. I'm pretty bullish on global growth for 2020, and um, halfway through writing a blog post for that, so I'll put that out next week, and you can see a bit more in that. But you know, I'm kind of waiting for the dust to settle a little bit before going in, and you know, because you never want to try and be the hero of these things and try and call them too early. The bottom, call the bottom too early. So, it's still a bit of risk out there, and definitely there's some major sources of uncertainty. But I am sticking to my guns on my core view, and you'll see why next week.